Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about MEDBOT-B interim report. Shanghai Microport MEDBOT Group Co. Limited offers a range of businesses and services including research and development of surgical robots, design, manufacture, and sale of surgical robot devices such as plus Taomai, laparoscopic surgical robot for urologic, gynecologic, thoracic, and general surgeries, plus DF Vision, 3D electronic laparoscope for laparoscopic surgeries, plus Skywalker, orthopedic surgical robot for knee arthroplasty and hip arthroplasty, plus R1, vascular interventional surgical robot for coronary angioplasty, plus ISR robot, robotic transperineal prostate biopsy system, transbronchial surgical robots for diagnosis and treatment manufacture of parts of surgical robot devices research, development, assembly, and distribution of surgical robot devices investment activities. The stock price of MEDBOT-B has skyrocketed over the past year due to several key factors. The company's robust half-year financial results, including a 77% revenue increase and narrowed, adjusted net loss, have been driven by a significant surge in overseas market revenue. Additionally, analysts have upgraded their ratings on the company, with J.P. Morgan upgrading it from neutral to overweight and Jefferies initiating coverage with a buy rating. New product approvals, including the single-port Taomai and multi-region approvals for its Honghu system, have also contributed to the stock's rise. Furthermore, MEDBOT-B has successfully raised HK $382 million through a share placement to fund core business development, solidifying its leading position in the AI medical concept stocks industry. The primary drivers of revenue growth for a company are multifaceted and varied. The commercialization of full-spectrum products has been a significant contributor, as seen in the rapid expansion of sales and international market entry. Breakthroughs in marketing existing products have also led to increased revenue, particularly with the success of flagship product Skywalker. Overseas sales have experienced substantial growth, with a 189% year-on-year increase in revenue. The accelerated rollout of R1 in hospitals has further boosted revenue, as well as the commercial installation of multiple products in leading public hospitals. The strong growth momentum of core product Taomai and the rapid coverage of Skywalker orthopedic surgical robot have also contributed to revenue growth. Additionally, investments in BioBot and Robocath have shown positive results, with increased fair value and reversal of impairment provisions. Overall, these factors have collectively driven revenue growth for the company, resulting in a significant increase in sales and market presence. Net income and profit margins. A tale of contrasting trends. The financial summary reveals a mixed picture of net income and profit margins for the company. On one hand, net income saw a significant increase of 77% from RMB 99.2 million to RMB 100 and 75.7 million on page 26, driven by rapid commercialization and growth in overseas markets. However, this trend is not consistent across all pages, as net income decreased from RMB 279,950 to RMB 114,923 on page 47. Profit margins also exhibit contrasting trends. On page 26, the gross profit margin declined from 47% to 41%, while on page 47, it increased from 47.3% to 71.5%. The inconsistency in these figures raises questions about the accuracy and reliability of the data. Despite this, the overall picture suggests that net income has experienced fluctuations, while profit margins have shown improvement in some instances. The company's financial summary indicates that it is generating positive operating cash flow. This trend is supported by three key points. 1. Growth in revenue and improved resource utilization efficiency have reduced cash consumption. 2. There has been a net increase of RMB 105,373,000 in cash and cash equivalents. And 3. Despite an initial error on page 59 indicating negative operating cash flow, the overall trend suggests a positive outcome. The company's debt level has undergone significant fluctuations over the years. Initially, total interest-bearing borrowings decreased by RMB 0.6 million and then further reduced from RMB 389,312 to RMB 216,700. However, within a year and after 2 years, there was an increase in interest-bearing borrowings, only to decrease again within 5 years. In terms of interest expenses, the company has experienced both increases and decreases. Interest expense on interest-bearing borrowings increased from RMB 7293 to RMB 9912, while repayment of loan from MPSC and corresponding interest expense decreased from RMB 39,091 in 2024 to RMB 11,000 in 2025. Overall, the company's debt level has seen a mix of decreases and increases over time. Interest expenses have also fluctuated, with some increases and one notable decrease. Management is optimistic about the company's outlook, with a focus on accelerating growth through innovation-driven strategies. Key initiatives include expanding in-hospital use of R1, developing remote surgery technology, and building a global network system, enhancing product portfolio through cutting-edge research and technologies, accelerating commercialization and market penetration through training and standardizing robot operation processes. Management is committed to a globalization strategy, investing in core business areas such as overseas and local commercialization, R&D, and replenishing working capital. This suggests that the company is poised for significant growth and expansion in the coming period. Concerns over inventory buildup and supply chain disruption. The financial summary highlights a pressing concern for the company: inventory buildup. This issue is further emphasized by a direct mention on page 29, where it is explicitly stated that there are indeed concerns about inventory accumulation. The presence of such a problem can have far-reaching consequences, including wasted resources, reduced efficiency, and potential losses due to obsolescence or spoilage. That concludes the financial summary. For MEDBOT-B, feel free to comment below, and I will be happy to answer them when possible.